Good afternoon, everyone. My name is Vyshal Sreenvias, and today I will be discussing Morgan Stanley, one of the world's premier financial institutions. I'll walk you through its history, financial performance, strategic advantages, growth prospects, and key considerations such as ESG factors and artificial intelligence innovation. And finally, going over some investment risks. Let's dive into the history of Morgan Stanley and why Morgan Stanley is a good investment choice. First of all, we'll go over the history and background of Morgan Stanley. Morgan Stanley was founded in 1935 as a partnership, and by 1986, it went public, marking the beginning of its broader growth. And in 1997, it merged with Dean Witter Discover & Co., forming Morgan Stanley Dean Witter, and rebranded to simply Morgan Stanley in 2001. The company has grown through significant acquisitions, including E-Trade and Eaton Vance, diversifying its services and strengthening its position in wealth management and financial services. We'll also go over a few core offerings and services of Morgan Stanley. Morgan Stanley provides a wide range of financial services, including investment banking, wealth management, and investment management. The firm specializes in advising on mergers and acquisition, underwriting debt and equity, and capital raising, catering to institutional clients, corporations, and individual investors alike. One key strength of the company is its wealth management division, offering personalized financial strategies to a diverse group of clients. A major focus for Morgan Stanley has been its integration of AI into its services. The firm's collaboration with OpenAI for AI-driven financial advising is a prime example of how the company is leveraging emerging technologies to enhance client service and operational efficiency, maintaining its competitive edge in a fast-evolving industry. Now, we will move on to a quick investment summary. Morgan Stanley has many desirable traits, making it a strategic choice for investment. With a target price of $141.43, representing an 18.16% upside from its current price, I strongly recommend buying Morgan Stanley. Looking ahead, Morgan Stanley growth strategy positions itself for continued success. The company's investments in AI-driven financial services and global wealth management will be key drivers for long-term revenue growth. The company is also well-positioned in advisory services, particularly in mergers and acquisition, ensuring continued strong performance in investment banking. These areas, combined with a solid reputation in wealth management, ensure that Morgan Stanley remains a competitive force in global finance. Moving on to an industry analysis of the financial services sector. Morgan Stanley operates in the global financial services industry, which includes capital markets, asset management, and advisory services. The industry is highly cyclical and sensitive to interest rates, inflation, and geopolitical uncertainty. In recent years, there has been a strong shift towards wealth and asset management services, driven by rising global wealth, especially among retail investors. Competition is fierce. Names like Goldman Sachs, JP Morgan, and Bank of America dominate the investment banking space. However, Morgan Stanley stands out due to its balanced business model. Roughly 50% of its revenue from wealth and investment management alone, offering more stability compared to peers that rely heavily on volatile trading and advisory income. Moving on, we'll cover the competitive positioning of Morgan Stanley. Through a moat analysis, Morgan Stanley enjoys a widening moat thanks to two key sources of protection: economies of scale and network effects, and regulatory and institutional barriers. First of all, going into economies of scale and network effects. As one of the largest financial institutions in the world, Morgan Stanley benefits from substantial economies of scale. Its scale allows the company to offer financial products at lower cost and higher profit margin compared to competitors. The company's global reach in 41 countries allows it access to deep capital markets and cutting-edge technology, helping reinforce its competitive edge. Secondly, the regulatory and institutional barriers. As Morgan Stanley operates in a highly regulated environment, which creates significant entry barriers for new competitors. The firm's established compliance infrastructure and its long-standing relationships with key financial and governmental institutions make it resilient to competition from emerging fintech firms or other traditional banks. Moving on, we'll go over a quick financial analysis of Morgan Stanley. Morgan Stanley has consistently demonstrated financial strength, which reflects its robust business model and operational efficiency. First of all, going over the revenue. Over the last 5 years, the firm's revenue peaked at $59.8 billion in 2021 and stabilized at around $52 billion in 2023. Despite macroeconomic challenges, Morgan Stanley maintained strong profitability, reporting a net income of $9.2 billion in 2023. The firm's total assets consistently exceed $1.1 trillion, showcasing its financial stability. With strategic acquisitions like E-Trade and E-Advance, its equity position reached a total of $129.4 billion in 2023, and it has kept its liabilities in check. Moving into the cash flow, Morgan Stanley has generated $6.9 billion in cash flow from operations in 2023 alone. This demonstrates its operational efficiency and the company's ability to fund growth initiatives while maintaining financial flexibility. And finally, moving over to the profitability and growth of Morgan Stanley. Morgan Stanley boasts an EBITDA margin of 25.7% and a return on equity, ROE, of 18.3%, significantly outperforming the sector's median of 12.5%. These strong profitability metrics underscore the firm's efficient use of capital and risk management. Moving on, we'll go over the valuation of Morgan Stanley and how we reached the target price of $141.43. Based on a discounted cash flow analysis using the excess returns model, I've calculated a target price of around $141.43 for Morgan Stanley, representing an 18.16% upside from its current price of $115.74. This model assumes a stable return on equity of 15% and a cost of equity of around 8.48%, which results in a fair value estimate of $141.43. I did not include a higher expected ROE of 15.7% as there's uncertainty around Morgan Stanley's ability to consistently outperform the industry average. Nonetheless, the model highlights a solid upside potential, making Morgan Stanley an attractive investment opportunity. Moving on, we'll go over a few investment risks that must be considered when deciding to purchase Morgan Stanley. While Morgan Stanley has a strong foundation and promising outlook, there are several risks to be aware of before investing. First of all, the high and growing debt. So these are two key points that must be addressed when coming to the investment risks. Morgan Stanley has a debt to equity ratio of 398.4%, which is significantly above industry norms. Over the past 5 years alone, this figure has grown from 360.9%, signaling increased reliance on leverage. Additionally, its operating cash flows cover only 0.3% of its debt, raising concerns about the firm's ability to manage obligations during downturns or interest rate hikes. In terms of market stress, this could create financial vulnerability. However, there's a positive part to this. The overall debt that Morgan Stanley has is fully covered by its cash. Morgan Stanley currently has more cash than its total debt owed. Moving on to the dividend sustainability, which is the third point. While Morgan Stanley currently offers a 3.2% dividend yield, its payout ratio sits at 45%, and dividends are not fully covered by free cash flow. If earnings decline, the company may struggle to maintain or grow dividend payouts. It's also worth noting that the yield is lower than the top 25% of dividend-paying stocks in the United States, which sits around 4.69%, meaning it's not yet a standout choice for income-focused investors. Moving on to the final point, which is insider selling. Another red flag is recent significant insider selling. Within the last 3 months alone, high-ranking executives, including the co-president and executive chairman, have sold a combined $6.7 million in stock. While insider selling doesn't always indicate trouble, the scale of these sales could suggest concerns about future performance or a perceived plateau in valuation. Moving on, we'll go over some Morgan Stanley's ESG strategies and some considerations around the corporation. ESG factors are increasingly becoming a focal point for investors, and Morgan Stanley has made notable strides in this area. The firm has consistently demonstrated a commitment to sustainable finance, channeling investments into clean energy, sustainable projects, and ESG-focused funds. Morgan Stanley is also actively working to improve its internal governance practices. The company's efforts in promoting diversity, equity, and inclusion, DEI, and its commitment to transparency in corporate governance further solidifies its reputation as a responsible corporate entity. These initiatives help Morgan Stanley align with broader market expectations for socially responsible investment and reinforces its position as a leader in the financial services with a conscience. Moving on to some AI considerations coming to Morgan Stanley and a few future outlooks of these AI considerations. Artificial intelligence is another key consideration for Morgan Stanley as the firm increasingly incorporates AI technology into its services offerings. Through its partnership with OpenAI, Morgan Stanley is exploring the use of AI to enhance financial advising, risk management, and client services. AI helps the firm provide personalized investment strategies to its clients, driving both operational efficiency and customer satisfaction. These advancements in AI further reinforce Morgan Stanley's ability to innovate and stay ahead of the competitors, making it well equipped to navigate the future of finance. I would like to thank you for your time. Thank you.